Welcome back. Is the Austin, Texas housing market still going through a correction or a housing crash situation? Today, I'm going to dive deep into it as we're heading. The spring 2025 is moving very quickly, and we are heading to this in the next few weeks. As I recorded this, is we're heading to the second quarter of the 2025. How time flies! So I know Austin, Texas has been in the news for the last a number of years, especially in the past few years. There's a lot of things going on, so it's a very unique market. So let's see whether this Redfin data I'm going to share with you will confirm or refute any the mainstream media, what everybody's talking about, that the Austin housing market is going through some real challenges. So let's go ahead and dive deep into this, and feel free to comment and subscribe to my channel. And without further ado, let me go ahead. And here it is. Here's the Redfin data this week, which is in the middle of March. So let's go ahead and dive deeper. From a high level, it's going to be a fairly short presentation. So new listings year over year, this data, and the end date is March the 9th, 2025. So the new listings are minus 9.9% new listings from the prior year, which is right here, and a little bit higher in terms of new listings from 2023 and 2022, but a little bit lower than 2024. So nothing that unique, interesting about it, but there are several metrics I'm going to share with you, which is important, which are median days on market, and active listings. That's an important metric. Month of supply is an important metric, and average sale to list ratio. For those of you who live in the Texas area, in Austin area, please comment below what you think about my analysis. Or you living in Austin? If so, what are the buzz? What's going on in your neighborhood? I know each market is local, very much local, hyper local, actually. As an investor, I am a real estate investor. I'm not a licensed realtor, in case you're first time to my channel. I'm a real estate investment advisor, and I help people from across the US to buy turnkey, remote cash flow investment properties in the best growth markets throughout the country, mainly in the South and Southeast, however, including Texas. But we have not been buying inside Austin. It's way too expensive, and the cash flow does not pencil out. But we do buy in the suburbs, way deep in the suburbs, in north of Austin Metro and southern, way down below Austin. That was for a number of years now, and a fair amount of our investors over the years have purchased cash flow turnkey rental markets in Texas and elsewhere. So from my big picture perspective, I have a high-level experience about this Texas market for having been an investor for several decades, assisting with my students. Let's get back to this data here. New listings, nothing to talk about, which is that critical. Let's go over the median sales price. Again, question is, we always going to come back to here, like the beginning of the second and the third quarter of 2022, when the mortgage rate rose from 3 to 4% all the way to 7 to 8% in the second half of 2022. And the Austin housing market, it reflected tremendous rise of the home prices back in May 2022 to 574,000. Then when the rate skyrocketed, when the Federal Reserve raised the rates dramatically in such a short period of time, that really impacted many housing market, in particular Austin, Texas, because Austin has achieved such a tremendous appreciation, skyrocketing home prices ever since the pandemic began. Now it has subsided. And many of our investors, we purchased, like I said, outside Austin, like 45 minutes away, and we have experienced like 50 to 70% housing appreciation when we purchased those rentals back in 2020 and 2021. So there are bound to be some corrections, and Austin is one of the main metros that are really impacted by skyrocketing home prices and corrections. So as you can see, the housing prices decreased just within the latter part of 22, from 574 all the way down to 459. Then the next few years, 23, 24, 25, has been consistently stabilized, if you will, nothing to the extreme, either higher up or lower. So as we begin, the median price year to date is 434,000, which is 4% year over year decrease from the previous year. All right. So we have not seen any dramatic increase or decrease of the medium sales prices in Austin so far this year, but they remain to be seen. So what I want you to direct your attention, the first metric, which is very important, I believe, is the active listings. Active listings right now is like 10,750 houses for sale year to date, March the 9th, 2025, which is 5.52% higher than the previous year. And for the last 2 years, we have some very elevated, huge supply of homes coming into the market as the correction has continued to impact this market. Now, when you go back to 2022, the active listings were only 4,265, which is back in March 22, before the increases in the mortgage rates. So there we had a lot of bidding wars and multiple offers occurred during the pandemic that caused the home prices to skyrocket so much. It is not sustainable. It's unfortunate that Redfin does not show the active listings for 2021 and 2020. Suffice to say, there's been a dramatic increase. Look at this. From 4166 active listings in February 22, then 23 went all the way out to 9,687, which is 132.14% increase, like more than double the amount of supply of inventory from 2022 to 2023, then 2024, a few percentage point increase, and then 2025, even a few more percentage point increase, which is very interesting. Active listings, a medium days on the market right now is 86 days, almost 3 months in average houses on the market. So is the longer the medium days on the market continue to occur, it'll cause downward pressure on home prices. So when we look at the tail end of the pandemic, almost tail end back in March 2022, the medium days on the market is less than 30 days at 27.7 days. Then, ever since the mortgage rate has increased dramatically from 2022 to 2023, which is on this blue line, we were talking dramatic increases in days on market to all the way to 82 days, then 80 days, and now 86 days. So when you reach 90 days, medium days on the market, we're talking some big time serious trouble. All right, so let's monitor medium days on the market. So let me see what else is important right here. Active listings. Did I go over active listings? Yes, we did. Sorry. All right, let's go over price drops. Price drops is at 7.2%. It is on an upward trajectory as we speak. So if the price drop reach double digit at 10% or more in the next few weeks, next few months, we will see some continued potential home prices will drop accordingly. So because the seller have to lower their prices. If you look back in the March of 2022, the price drops were only 1.5%. All right. So again, this trend is very interesting. So we need to pay attention to it. Let me see. And the month of supply, 4 to 6 months, is a balanced market. The number of the supply pretty much equal the number of based on demand. So the demand supply equilibrium is balanced. It's a stabilized market. 4 to 6 months. If anything less than 4 months supply of inventory is a seller's market, and the seller will dictate the price of the home. Anything higher than 6 months supply of inventory, we talk about the buyer's market, where the buyers dictate how much the price of a home should be selling for. So with that in mind, the weeks of supply year to date so far, March the 9th of 2025, is 22 weeks divided by 4 weeks per month. So we're talking 4 times 5 equals 20. So little bit more than 5 months supply of inventory. So we are right in the middle of the normal inventory, if you will, whereby the supply of the inventory is equal to the demand. So right in the middle, 5 months, but it's on a downward trajectory. So we're heading to the spring market right now, March, April, May. If the mortgage rates, which is right now is around 6.7% per mortgage news daily, then if the mortgage rate continue to come down a little bit more based on the past few weeks, then we may see more demand. If there are more demand in the market, so homes should be selling faster. So this week's supply, if it continue to go down, that means there are more demand based on the mortgage rate that triggers everything. Does that make sense? So right now is a balanced market so far, weeks of supply. And let me see what else. And finally, the average sale to list ratio, as you can see right here, is 0.97%. That means the homes are sold at around 3% less than the final list price. So that means the buyers are getting the leverage. They're dictating the price. So they're able to, so the seller have to lower the price around 3%. So good for the buyer. All right. So I think that's pretty much I have to say in this particular uh, video. So at the end of the day, so what's my recap? My recap is still too early to tell whether Austin market has been going through a correction. We have the prices have gone down and what have you. So the data tells me that the spring market is still have not come in full force yet. So we have to wait until the next month or so, because spring buying season is always more activity in the spring each year than any other time of the year. We should see some increased transactions because more people are getting off the sidelines. And so it's supposed to be a hot springtime season. So you never know, right? Yeah. So that's what's happening. So my takeaway is there's still more than 10,000 homes on the market. So I think the buyers have the leverage. I believe, even though we're at 5 months of supply of inventory in the Austin metro, I believe the buyers have more leverage so they can negotiate for better deals. If those are primary home buyers. So a lot of builders are providing a lot of incentives, new construction homes. There's a lot of new construction homes in the Austin metro. New builders are trying to sell their properties, but they are giving away a lot of incentives. They will do a rate buy down. The builders to buy down the interest rate for the buyer, and they are providing more incentives to the buyers, closing costs, reimbursement, and even reduce their prices a little bit more to move the inventory. That's what the builders does. But the resale homes are, again, has been pretty much saturated. It remains to be seen. It's not a housing crash. The way I define a housing crash, in my 2 decades of investing, we're talking like the 30%, 35% housing price decrease. So we have not reached that level yet. Austin, this is the high-tech mecca of the South. Still a lot of robust high-tech industry still doing fairly well. And we see the growth long-term, at least for the Austin market. So that's the long-term, which is going to be fine over the next 5 years and beyond. Austin will be fine. It'll slowly correct itself, but short term, there's a lot of volatility in Austin. Yep, that's my take. And so, if you please comment below, what do you think about the data I just provided you? And yes, it's still a correction, but not a housing crash. So, for those of you primary home buyers, if you were waiting on the sidelines, hey, there's nothing wrong to negotiate for some deals. If you're ready to buy, if your family situation is such that you have to buy a new house, or whatever the case may be, then it's no better time to buy right now. You can negotiate for some good deals. For risk investors, I wouldn't encourage risk investors to buy in the Austin metro, because the medium home price is already skyrocketing very high. You can't add cash flow because the average home of a price in Austin exceed $400,000. So it's very hard to cash flow for investors. I prefer to buy lower level, entry level homes, $200,000 $250,000 price range. So if the renter can pay $2,000 per month, that's a good metric, rent to value ratio. So I wouldn't necessarily take my buyers to buy in this high price Austin metro anymore like I used to years ago, but we rather buy in San Antonio, which is 1 hour, San Antonio, Texas, which is 1 hour below Austin, and the median home price in San Antonio is like 50%, around 50% less than Austin. As a result, actually, many buyers are buying into San Antonio close by in this mega metro than by Austin itself. People born in Austin, they did well 3, 4, 5 years ago, 50 to 70% price increase. And then so what if your home decreased by 10 to 20% or during this current correction in the past 2 years in Austin metro, but it's only on paper. It's just paper. The only way you would potentially not do well if you sell your property right now in Austin. So if you can able to stay in the house longer over time for 5 to 7, 10 more years, the market will adjust itself positively. All right. Don't sell at the wrong time. And so you have to get over this hump, get over this Austin corruption challenges. All right. So that's all I have to say. If you receive any value from this video, please like and subscribe to my YouTube channel, and also put your email on my website so you can become a free member of our real estate investment network, so you can learn more about how mom and pop investors from anywhere in the country can purchase turnkey cash flow properties, low entry point, good cash flow with 25% down payment in the many great markets that we promote, mainly in the South and Southeast, including Texas. There's other parts of Texas, like in North Texas and South Texas, and San Antonio also. And in other markets, we also promote turnkey, remote, long-distance properties for investors all over the country, including Florida, Tennessee, Alabama, and Oklahoma, among the areas that we help investors to buy cash flow properties. Thank you so much for watching. I'll see you next time. Bye-bye.